Talk about the Axis Capital Conference, which is currently underway. 23rd to 26th June is when the conference, is being held. But of course, it's not going to be like last year's conference. It's all going to be on the web. It's going to be digital, and that's how several large and mid-cap companies, several investors as well, are participating. So let's understand what exactly are companies talking about, what are investors talking about at this conference. We have with us the joint MD and co-CEO of Axis Capital, Salil Pitale. Salil, thanks so much for joining us today on ET. Now, just to start off with, you've completed one full day at the conference. It's day 2 now. What's the sense you're getting? What are companies saying? How confident are they about a recovery? I mean, I'm sure every sector is not confident. There are some sectors that still are a bit more restrained, a little less exuberant about the recovery, or rather the pace of recovery. But yeah, largely, what's the chatter among India Inc.?
So, this for us, this is the second version, the second 2.0 of the digital series conference that we're doing. We did the first one in the early part of June. That was at a time when people were, just about getting back from the, the tough time of a full lockdown in April and May. So the commentary at that point of time was, very conservative. The whole thought process was save money, control costs, defer spends for growth. That was the thought process which is coming in the early part of June. I think this time around, early takeaways, we finished about 1.5 days of the conference so far. I think there are some reasonable takeaways. Because of the lockdown having been lifted under 1.0, there are sectors like two-wheelers. There's some recovery people are seeing. Retail, of course, retail is restarted. So therefore, again there is some action. Some of this may be still be seen as maybe pent-up demand, and not necessarily, a reversal of trends. But yeah, we're seeing some of that action coming in. The other action we've seen is, cement. We've seen generally people in the rural space, and we saw this even in the first version of the conference, that, cement demand in rural India has been okay. So which is, good news. I think, again, we've got to see whether it sustains or not again. So, those are the core takeaways so far in terms of, people looking up. Also on the banking and financial side, we've seen, in this current part, some reasonable repayments happening on both the banking and the MFI side. So, that's again good news, which is coming in here. But just to reiterate, this is still early trends. We'll have to see whether a lot of this demand stays sustained or not, and that, I guess, time will tell. People realize that this is the time to be conservative overall, and that's the overall message that one gets to see quite often now.
All right. Salil, now coming to the investor point of view. The recovery may be slow for some sectors. It may be a bit more faster for some sectors. But the one thing I think that investors are really sort of agreeing upon is the rate of recovery that the market seems to be factoring in. There seems to be a deep disconnect between what the actual realities are on ground, what our macros are suggesting versus what the equity markets are. I mean, as we're speaking, the rally continues. 10,500 is what we saw earlier in the day. So what's the chat among investors? I mean, are we looking at these very high valuations in markets as something that should be a bit perturbing?
So, this rally, as most people realize by now, that this is a very liquidity-driven rally. There's enough money printed globally across board, which is, finding its way into markets. The same is the case in the Indian context. India has the benefit of also, the mutual fund flows on the SIP side coming in. So there is liquidity chasing stocks. And in normal situations like this, liquidity tends to go into more liquid stocks and therefore the larger caps and so on. All the companies wherein, the businesses are seen to be robust enough to sustain the difficult phase that we are all part of and, come out stronger at the end. As a result, market valuations do look up. I mean, our very recent research published talks about the fact that even today we are at market multiples which are at the top end of the quartile, if you take the Sensex and the Nifty. So yeah, it's a liquidity driven market as we see, and liquidity moving into the better names. it's a tough thing for fund managers actually, because today with flows coming in, there is no choice but to look at some of these stocks which potentially might be seen as strong on valuation, but they're better on quality, and therefore we need to chase those. So that's the nature of the market today. And till the liquidity doesn't ebb off, this is more likely to continue. I think within that, a lot of the fund managers then have to focus on which are the good names that we need to focus. Good sectors first, and within that the top names. And you would find that a lot of capital therefore gets pushed in that direction itself.
So Salil, amidst these times where obviously there's so much of uncertainty, right? You don't know what the future is going to hold. And amidst all of this liquidity that's coming in, especially in the hands of mutual fund managers, would they rather than just continue with that whole growth story where perhaps value investing may not work as well as growth? And that's the reason why maybe, the star performers of the last 2 odd years, so Bajaj Finance, RIL, HDFC Bank, could we be seeing money being pumped into these larger names only, as opposed to fund managers going around scouting for value?
See, I think I'm sure there is value, and a lot of fund managers would allocate some part of their capital towards value discovery. But in a market which is driven by liquidity, you can't be the one fund manager sitting on a mid cap or a small cap stock, because that can hurt you. And therefore, in terms of allocation of capital itself, you'll invariably find some of the best names will still gravitate more towards the larger caps, the growth oriented one. The value buyers will, the amount of capital allocated to the value buy would definitely be not as high as one would think. I think a lot of capital also will go into sectors which will be seen as sustainable over a period of time. So clearly we are seeing the whole part cement, rural housing, the whole part on domestic pharma, especially in the chronic side. Consumer staples definitely is where people will want to put in capital. Anything which is in the rural ecosystem probably is seen as much more likely to see interest coming in. Of course, all the digital telecom related space has seen some recent interest, and it's also because the nature of the change in way of life for most of us. So I think those are the spaces that are still seem to be positive. There are people have to wait and watch when discretionary consumer spending comes back. We have to really wait and watch how auto behaves. Auto is an important sector. We will have to really wait and watch. It's still early days on that side. BFSI as a sector it mirrors the economy. So we do see a lot of good quality buying which could happen among the top tier private sector banks. Some of the insurance players who seeing a surge on the term policies coming in. So those are the spaces wherein there will be investor interest around. But I think it will still get concentrated into growth. It will get concentrated into larger names. The capital allocated toward value may be a little lower, is our sense.
All right. Well, great. Good luck with the conference. And thank you so much, Salil, for joining us, taking our time to just give us a sense of what is the chatter at the conference, the 2.0 version, which is now being held. Of course,